Volatility contractions often precede explosive breakouts. Here's how you can program a simple Bollinger Band squeeze strategy to capture trends on the Aussie yen.
Bollinger Bands consist of a 20-period simple moving average surrounded by a pair of upper and lower bands. These bands are placed at 2 standard deviations above and below the moving average. In the chart below, you can see how the bands elegantly convey market volatility and trend direction. The rising moving average indicates an uptrend, while the bandwidth measures market volatility. When zooming out, it becomes evident that market volatility is often cyclical in nature. Volatility is high when the market trends, and subsequently falls when prices consolidate. The Bollinger Bands therefore alternate between periods of expansion and contraction. Notice that explosive breakouts are often preceded by contractions. To detect these, StrategyQuant provides a Bollinger Bands Width Ratio indicator. Let's put it to good use. The BBWR quantifies the expansion and contraction of the Bollinger Bands using this simple calculation. It is not available in MT4 by default, but I've provided a download link in the video description. Here's the BBWR plotted below prices in MT4. A series of small BBWR values indicates a Bollinger Bands squeeze. These squeezes often occur before major economic announcements, where the vast majority of market participants wait on the sidelines, ready to jump on board a trend should a breakout occur. Armed with the BBWR indicator, let's capture some breakouts on the 1-hour Aussie yen. The idea is to use a 30-period BBWR to detect a Bollinger Bands squeeze, which could signal an upcoming breakout. Unfortunately, quantifying a visual pattern is always a challenge in algorithmic trading. How do you train a computer to detect a squeeze? To keep things simple, I'll define a squeeze as the BBWR reaching its lowest level in 60 periods. To improve the win rate, I'll only take breakouts in the direction of the longer-term trend. I'll use a simple momentum filter to determine trend direction. An uptrend is present if the current close is above the close 50 periods ago. Likewise, for shorts, look for the current close to be below the close 50 periods ago. Don't be fooled by the simplicity of this filter. I've found that it often punches above its weight. If this squeeze occurs during an uptrend, I'll place a buy stop at the prior day's high. Here's how a long entry looks. I'll use a 70 pip initial stop loss and trailing stop. This simple combination usually works well for trend-following strategies. Let's hop over to AlgoWizard. Here are the entry conditions. Note that there are 2 different look-back periods in use for the BBWR condition. BB period is the look-back period for the BBWR itself, which is set to 30. BBWR look-back is the period used to determine the minimum BBWR value, which is 60. Stop entries and trade management are programmed as follows. It's easy to cherry-pick a handful of spectacular trades from any strategy. To combat this, I always backtest my strategies over the long term. Here's a 10-year backtest of the BBWR breakout strategy on the 1-hour Aussie yen. I redid the backtest using MT4's backtest engine, and the statistics are similar. Getting similar results using different backtest engines and data sources gives me confidence that the strategy has an edge. If you love catching breakouts, be sure to give the BBWR indicator some consideration. Find a series of small values, especially before major news releases, and you could soon be riding the next big trend. Conversely, if mean reversion is your thing, look for signs of overextension, combined with a large spike in the BBWR. These indicate parabolic moves, which are followed by sharp reversals. Thanks for watching, and be sure to subscribe if you want to see more trading strategies.